Hey everybody, Mike DeSepoli, Heritage Financial Advisory Group. Welcome to Heritage Insider Weekly for Friday, August 18th, 2023. Hope you're all having a great week. The market correction continues this week. Really not much to speak of on the news front. We did get some pretty dreary action in stocks, which we'll cover here today. Don't see anything to worry about at this point. We have an overbought market meeting a seasonally weak period with naturally everybody looking for a correction. So self-fulfilling prophecy, we got exactly that. As far as the Federal Reserve and interest rates and the inflation news cycle are concerned, nothing to report on this week. We are in a Fed blackout period. It's about 40 days until their next meeting and press conference. We did have the minutes release, which is the notes from their previous meeting last month, but nothing there that really suggested anything to the market different than we already had. So let's take a look at the market. And the market was following our plan very nicely, and something happened on the way to 4,600 that suggested to the market that it was time for a pause. I think just the magnitude of the move since the March low into that mid to late July high was enough to be suggestive that the market needed to correct a little bit. So again, context is important. Context always matters in investment markets. The last 2 weeks have not felt great to be an investor, but when you look at the path that the market has walked this year, it's really not at all abnormal to see a pullback of this magnitude. Now, granted, July was a very strong month, so this pullback has been a little bit more fierce. But when you look at where the market is and how it's pulling back, it has come into a level, a very popular level, predefined through this, this year in the market, which is normal to see, right? So we had different levels that we were monitoring through the week-by-week video tutorials with you folks. And we talked about the importance when the market had broken above 43.50. And that back testing is part of that process, and sometimes it's a likely event that's going to happen. We did get that eventual break higher to 4,600, and now the market is returning to the scene of the crime. So when we look at this, number one, from a technical fashion, it's not all that abnormal to come back and test the previous resistance level and see if it turns into support. So we would look to see if the market can generate a bounce here. We also talked about being in a seasonally weak period. So August tends to not be the greatest month in the stock market. Not a lot goes on. There's not a lot of volume, a lot of vacations on Wall Street, and naturally we see lighter trading volumes. So when we see this pullback on lighter volumes, it doesn't really suggest to us that there's a broader problem that's brewing. Also, when we look down at one of our indicators here, which tells us whether the market is overbought, needing a break, or oversold, maybe looking for a bounce near term, the market is exceptionally oversold here, more so than we were back in April and March when the market previously corrected. So we would be looking to see a bounce in or around these levels soon. And overall, I think this will set the market up better for the year end because when you look at through the course of this year, anytime we got a pullback, it generated more upward momentum for the market in the months to come. So regardless of the reason, right, everybody wants a reason. What's the reason for the pullback? The market, when it needs to correct, it will find a reason. So we could blame the bond debt downgrade from the Fitch rating agency. We could blame some weak China PMI and manufacturing data. Some people want to blame Apple because they would say their earnings report was subpar. And again, Apple, the context of things, having a fantastic year, a little pullback is warranted from time to time. So what we're watching to see is as the seasonal patterns will start to shift as we get through August, do buyers reemerge in the market? And if so, can they continue to push this market higher? Here is that view of seasonality in a chart from our friends at Carson. And we see the year 2023 really following seasonal patterns, to the script. We have a big first half from through June 30th, and markets then tend to consolidate through the summer into the fall before ramping up into year end. So I don't know about you, but I know many investors that would sign up for this outcome and end the year up by 25%. But because of the speed of the move up to start the year, these pullbacks seem a little bit more ferocious. And again, volatility is the price we pay to invest. So just a reminder to investors, this from our friends at Ned Davis Research, when we look at the common year in the market, you generally get about 7 dips of 3%, right? You get about 3.5 corrections of 5%, what we call a mild correction. Usually you get 1.1, 10% corrections a year, and so on and so forth. So a nice 5% pullback in the midst of a year that's going very well. Not all that uncommon. And also from an investor sentiment standpoint, we're seeing exactly what you'd want to see in this pullback, in that it has shaken investors to their core very quickly. I mean, remember, folks, we're talking about an S&P here that's down maybe 4.5%, 5% in a year that it's up 20, right? So given that move, which is not very large in the grand scheme of things, we've seen investor sentiment really snap back. We've gone from extreme greed to fear all inside of a month. This is textbook what you want to see in a market correction. When there's overexuberance in markets, you'll get the pullback that we're getting in the S&P, and this won't budge. It'll just stay extreme greed because people will be so certain that the market's going to continue higher. So again, here's our S&P. It's pulling right back into some of those key support levels in tandem with the Fear and Greed Index pulling back as well. So from a technician's point of view, everything looks fine to us. We'll just continue to ride through the volatility. A lot of this, again, is on very light volumes. It's mid to late August. There's not a lot in terms of news going on in the stock market, and they're very easily manipulated and drifted in both directions. So far, so good. Hang in there. If you have any questions, reach out to us. We're always here to talk to you about anything that's on your mind. Have a great day and a great weekend, and we'll see you back next week for Heritage Insider Weekly.